What is going on, investors? My name's Emmanuel, and John D. Rockefeller said, "The way to make money is to buy when blood is running in the streets." And it's safe to say the streets have been bleeding this week. Guys, it's beginning to look a lot like Christmas. And no, I'm not talking about December the 25th. I'm talking about the stock market. You already know me on this channel. I love red days. But we have been blessed to have one of the worst weeks in the stock market since March. And I took full advantage of the discounts and I went shopping. I can't lie, guys, I went ham this week and it was amazing. And this is why you need to always have cash on the ready. So when stocks do go on sale like they are right now, just like they did back in March, and all the previous market corrections, all the previous market crashes and recessions, we who are sitting on some cash can completely capitalize and take full advantage, because this is exactly how the rich continue to grow their net worth, by always buying when there is blood in the streets, according to Rockefeller, who again is one of the richest men in history. Now, I did end up buying some brand new stocks this week, and I'll be sharing all of my purchases, why I bought them, and also my price targets for all of these stocks in this video. And I also added to some positions that I already own and you guys are probably already aware of. And essentially, I used this opportunity to bring my average cost price lower, because I have no intentions of selling these companies anytime soon. I'm in it for the long term, and I still think that they have a ton of growth ahead of them. Now, if you follow me on Twitter and on Instagram, then you already probably know what these positions were. So follow me on those platforms if you don't already. The links to both my Twitter and my Instagram are in the description below. I also put up a message on my Insta story stating that I was thinking of doing a full video on all of the stocks on my watch list, why they are on my watch list, and also my price targets for each of these stocks. And the response was an overwhelming, please do it. So definitely look out for that video within the next couple of days, because I have listened and I will act on it. But like I've mentioned, this video is all about the stocks that I purchased this week. And I also do want to explain why I think the sell-off is happening right now. And I want to back it up with some history that already indicated this was likely to happen in September and October. But right before we jump into all of that, please don't forget to destroy that like button. Absolutely destroy the like button. It lets me know that you enjoy this type of content. And also, if you are new to the channel, then hit that subscribe button to stay up to date with my stock analysis content, all the stocks that I buy, sell, all the stocks that are on my watch list, as well as any major stock related news. So with that said, stay locked in, watch until the end, and also let me know if you did go shopping this week, what did you purchase this week? So my first brand new acquisition that I made this week was Fiverr International. The ticker symbol is FVRR. And I've set aside a budget of between 5 to 10K for this particular stock. And I'll be purchasing more as the share price declines. But I started my position this week by picking up just 15 shares, and my current average price for this stock is currently $151 and some change. Now, I like to use key areas of support and resistance to determine my buy prices. And for Fiverr, my next buy price target is $130, because there's been a key level of resistance over the past few weeks at this price. And if it does break through this price, then my next buy price is around the $102 mark, which has also been a key support level. And then I'll load up my final set of shares at $75. So once I'm all in, I plan to continue to hold this stock for the long term and monitor the quarterly financial performance of this business. And speaking of financial performance of this business, Fiverr had an absolute blowout Q3 performance, which was a huge buy catalyst for me. I can't lie. This company is the epitome of a company that will continue to thrive during this current economic downturn. Just look at their financial highlights. They had accelerated growth in Q3 2020, and they had strong momentum from Q2 that continued into Q3 with an 88% year-over-year top-line growth. It's phenomenal. They also expect that strong results will continue as the global shift towards digital transformation and also remote work accelerates. So this precisely is why I also invested in Upwork 2 weeks ago. They are the two biggest players in this space right now. And to be honest, I actually can't wait for Upwork's earnings, which is coming up, I believe, next week. So Fiverr, ticker symbol FVRR, was my first brand new purchase. So my second acquisition this week was Medical Properties Trust, and the ticker symbol is MPW. I absolutely love this stock, and it's one of my favorite dividend paying companies. I now currently own 157 shares of this company, and I actually want to crank up this position to 300 shares. My average price is $17 and some change, and my dividend yield on cost at the moment is just over 6%, which is an amazing dividend yield. And if you are interested in learning how to dividend invest, I did do a step-by-step guide to dividend investing, and the link to that video is in the description below. So check it out if you're not sure what a dividend is or how it works. But in terms of price targets, I actually really find this current price really attractive. And I will probably load up some more as long as it stays within the $17 region. However, if the price does drop to its 2 months low of $16, then I'm just prepared to invest the rest of my entire budget for this stock and just leave it for the long term. And and just continue to reinvest the 6% dividend yield. But Medical Properties Trust also had an incredible Q3. They managed to collect 100% of the rent from their hospitals in their portfolio. The president also said operating conditions continue to approach and in some instances exceed pre-COVID levels, which again is just music to my ears as an investor. And the business just simply continues to do well. Although expenses did go up from a year ago, total revenues also rose from $224 million to $314 million. So for me, investors, this is a huge green flag. I remain super bullish on this stock. Hospitals are an incredible business in the middle of the Rona. Absolutely. My third acquisition this week was Adobe. Ticker symbol is ADBE. And I have done an analysis on this stock in a prior video. But long story short, I love this company. I love and used a number of their Creative Cloud products. In particular, Lightroom, I use that almost every day. Photoshop, I use it every day. I love their SaaS business model, which produces reoccurring revenue for the company. And to top it off, they also have an incredible balance sheet. So yes, I remain super bullish on this stock, but the stock price did drop below my initial purchase price. And I saw this as an incredible opportunity to pick up some more shares and also lower my average cost price. So I now currently own 9 shares of Adobe with a cost price of $471 and some change. And I do have a big budget for this stock. I have about 10K that I've set aside for this company, and we're now approaching halfway. So I do have a lot of room to add more shares as the price continues to fall. And some key levels of support and resistance in my view is at $420, and that will actually be my next buy price. And if it falls lower than that, then my next purchase price is at $367, roughly around that region, because that was previous resistance which turned support. And then I would love for the price to reach $313, which is a bit of a pipe dream, and I would be incredibly surprised if it does reach that. But regardless, I can't say no to Adobe at that kind of price. So my fourth acquisition this week was a brand new position, and this company is called Lockheed Martin. Ticker symbol is LMT, and this purchase was more for a portfolio restructuring play. I realized that my portfolio was extremely tech and healthcare heavy, and I wanted some exposure to the aerospace and defense sector. Boeing, ticker symbol BA, was one of my first choices, but I just can't see them recovering anytime soon with everything else that's going on in that business. Their planes that are still not flying. Now, don't get me wrong, there is a ton of upside for BA once they sort out their problems, and it's not a complete write-off for me just yet, and it does remain on my watch list. But I think as of right now, Lockheed Martin is a much more solid business to invest in my opinion, and especially as they literally on Friday just secured a $724 million Missile Defense Agency contract. And that's on top of them securing a $550 million and a $193 million Navy contract modification just this Monday. So they had an incredible week this week, and these guys have been winning contract after contract after contract. And I'm thinking to do a full analysis of this company sometime in November, so look out for that. But yeah, Lockheed Martin, a solid company that is backed by the government, by the US government. I went ahead and picked up 3 shares at a cost price of $353. And to be honest, I don't know why I did that, because I should have just gone in a bit heavier. I probably should have started with a 2K position, but I'll be looking for the price to hit maybe around $340 on Monday, or at least close to it, because I am incredibly bullish on this company. And if it drops lower than 340, then my next price is around $300. So my fifth and final purchase this week was MasterCard. The ticker symbol is MA. Again, I absolutely love MasterCard and I also love Visa, but MasterCard did drop significantly below my initial purchase price, which was around $300-ish a share. So I went ahead and picked up 4 more shares of MasterCard this week, which brings my total to 7 shares in MasterCard with a cost price of $294 and some change. And to be honest, I find MA attractive below $300, and my price targets are around $260, and the next price target is $227. Now, do I see MasterCard touching $200 a share like it did in March? Truthfully, I don't see it, but if it does, that would be extremely phenomenal. My budget for this stock is roughly 6 to 7 grand, and if it does touch $200 a share, I'll be willing to stretch that budget, but not too much, because I'm also invested in Visa Inc. And with the likes of Square and PayPal revolutionizing the way people purchase items, I don't want to be too overly exposed in Visa and MasterCard, to be honest. So those are the stocks that I purchased this week. Now, I do also want to add something before I sign out. And one thing that I learned from the previous crash earlier in March this year was that during a crash, don't buy trash. And what that essentially means is when there is a mass sell-off like we're experiencing right now, this isn't the time to be purchasing your highly speculative stocks, in my experience and in my opinion. You want to be buying the very best of the best companies that are available to us right now, and that are also selling at a massive discount. These are companies that you're confident will not only survive economic downturns, but they are also positioned to thrive off of these downturns. These are companies that dominate their sectors. They have incredibly strong moats as well as solid balance sheets. So bear that in mind, investors, going into the next couple of weeks and months, because as much as this week was red, I still think that there are more red days, red weeks, and red months ahead of us. And the reason for this is due to the mass global uncertainty. Uncertainty regarding the Rona and its soaring cases. Will we go into nationwide lockdown once again, similar to what is taking place in France right now? Or will it be a partial lockdown? They're dubbing it, or they're calling it, the lockdown lights, as they're currently doing right now in Germany. In the US, one party is not even entertaining the idea of lockdowns at the moment, while the other party, if they win, they're not ruling out lockdowns. Will Congress reach an agreement regarding the US stimulus? Who is going to win the US elections? There is just so much uncertainty right now. However, this is a fantastic thing for us as investors. And I did share this on my Instagram, that uncertainty gives birth to opportunity. So uncertainty leads to fear in the market, and fear in the market leads to a panic sell-off. Plus, historically, some of the world's worst stock market crashes, recessions, and depressions, they all started in September and in October. You had the Wall Street crash, which was in October 1929. You had the Great Depression, which was in October 1937. You had Black Monday, which was in October 1987. You had the Friday the 13th crash, which was in October 89. You had Black Wednesday, which was in September 92. You had the global crash in October 97. You had the Twin Towers crash in September 01. You had the stock market downturn in October 2002. And then remember, you also had the global financial crisis in September 2008. Every single one of these crashes, if you study your history, had high levels of extreme uncertainty. And back in March this year, when the Rona absolutely went crazy, again, we had mass global uncertainty. And that's opportunities for us to pick up fantastic companies that are going on sale. Incredible opportunities for us to pick up fantastic deals, which will boost our wealth quite significantly, because we're acquiring financial assets on the stock market. And this, again, is happening within the same year. So think about it, investors. We are going to experience 2 crashes in 1 year. It's unreal. It's amazing. So if you missed out in March because you were trying to time the market, like I was to some degree, which is not a good strategy at all. And Peter Lynch actually actually said that far more money has been lost by investors preparing for corrections than has been lost in the corrections themselves. And that's from one of the best investors of all time. And I do actually plan another video where I will explain how long bearish markets tend to last so that you're more prepared to hold for the long term, because the V-shaped recovery which we saw in March was simply incredible, and I don't think that will happen again this time around. But like I said, I'm not trying to time the market. I'm not trying to predict anything. I'm just buying these stocks that are going on sale right now, and I will continue to buy as the market continues to fall. With all that said, investors, please make sure that you do your own due diligence before you do decide to invest in any stock or any company. I've said it before, I'll say it again. I am not a financial advisor, so please view my content as purely educational. It's not investing advice by any means necessary. And if you do want to learn about investing in stocks, there are some useful links in the description below. Plus, my broker Trading 212 will send us both a free share if you sign up using the link in the description below. So with all that said, investors, I hope you had a great week. I hope you had a great shopping week. Don't forget to smash the like button, hit the subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching. I appreciate your time, and I'll catch you in the next one. Peace.